All right, here we are for our month one recap. What we're going to do in this video lesson is take a look at overall performance for the first month of Summit Report. Take a look at our best and worst trades from the last month. And then look ahead to some regulatory changes, some updates to the service, and overall strategy in the coming weeks and months. So to take a look from the jump at overall performance, so the whole mission and goal of Summit Report is to empower retail investors to take charge of their financial future. So I'm doing this by trading a small account with the goal of turning $15,000 into $100,000 live publicly, every trade, every win, every loss, recorded in real time. So I have 12 years trading experience. I've traded full time during various market cycles, far more volatile than anything we experienced in the last 2 years. And my strategy is constantly evolving and changing with markets. So month one, just so you guys could see the receipts, here's my X. So from the peak, we were up 44%. But here you could see on March 30th, account sitting at 15,000. And then you just simply follow this thread on X, and you could see the performance today. So for month one, overall pretty happy with performance considering market volatility. We had an 8% drawdown in broader indexes, followed by about a 10-12% bounce. Summit Report plus 6,200, so 41% gain. That's on 33 trades with a 67% win rate. And just zooming out here, I don't try to promise people, hey, I'm going to make you $1 million trading. My internal benchmarks are outperforming broader indexes. So in the same period where Summit Report was up 42%, the overall NASDAQ was up 14%, so an outperformance there of about 250%. The S&P 500 in that same period was up 9%, an outperformance of 4 times the S&P 500. And the other barometer that I measure my performance off of is Bitcoin, which is, certainly a more volatile asset class, but Bitcoin in that same period was up 18%, so about 220% better than Bitcoin. And this is by taking, very low risk, high reward setups. As you could see here in all of my trades, my cost basis on these trades have never exceeded $6,000. So I'm never having more than 33%, 35% of capital at risk at any given time on a trade. Part of that was, really just to build an initial buffer on the account. It's been about 10 years since I traded publicly on the internet, so it's good to see one go through the net, and a nice 41% buffer allows me to take on more risk in month two. So looking ahead, on June 4th, there'll be no more pattern day trader restriction. So what that means is typically in order to make unlimited day trades and access 2-to-1 margin and really just trade like a quote unquote professional trader, you need $25,000. And that's a long-standing rule that's with the intention of protecting retail from blowing up their account. But on June 4th, that is no more. And anybody with an account of over $2,000 can make unlimited day trades. And what a day trade is under current regulatory framework is you're limited to 3 in and outs in a 5-day period. So for example, you go in and you buy Tesla today, and or you take Nvidia, you sell your 1 share of Nvidia, and you go and buy Tesla on the same day. If you sell Tesla on that same day you bought it, that counts as a day trade. So that's 1 of 3 round trips. if you do more than 3 round trips, you no longer have a margin account and your account is a cash account, meaning you have to wait a full business day for your funds to settle and you have no access to margin. So when I'm trading full time, like I have over the last decade, I'm trading with more than 25,000. I typically trade 50,000 on a given month with target returns of 20%. But I'm able to buy, sell, buy, sell, buy, sell as much as I want in any given day with zero restrictions. So to date with Summit Report, I've been almost trading like a cash account. So extra restrictions, extra risk management, and even given those restrictions, still being able to put up 42% returns is something I'm happy with. And what that means for Summit Report is once this account reaches either 25,000 or the June 4th date comes, I could start taking on options trades. So options is a big part of my overall strategy, especially in the last year. I've gotten pretty good at trading both long and short dated options in $1 to $50 billion market cap companies. And it's certainly a higher risk trade for higher reward. But, as I start taking on those trades in Summit Report, I'll be creating a lot of content, educating people on how options markets work and how to best profit off of them. But without further ado, let's take a look at kind of top gains over the last few weeks, and we'll have a look at areas, trades that didn't go in our favor, and lessons we could take from that. So first off, we're going to have a look at MSOs. That was a 38% gain, $1,400, a little bit more actually. I traded it a few times. Let's call it 1,500. MSOs, that's the US Cannabis ETF. So I've been flagging the cannabis sector since the end of March, early April for regulatory change. I have 8 years of experience building startups in the cannabis industry, so it's a sector I followed my entire career, both as an operator in VC-backed startups and as well in financial markets. It's certainly a passion industry of mine. But if you take a look here, this is a daily chart. As you can see, the sector is incredibly volatile. So looking back to like last summer, sector was trading in the fives. And then as you could see here, last December, this is when Trump signed the executive order to reschedule cannabis to Schedule 3, which creates a lot of structural changes to the industry. So this sector spikes, it ran from 3 to 720, but the sector also has a history of dumping. So, that's why we were kind of cautiously playing this with about 20-30% account position size. But we started buying a week before 420. Historically, there's always a 420 bump to the cannabis sector with mainstream media covering cannabis. It's a very bipartisan issue of rescheduling, expungement of records of people with cannabis offenses, yada yada. So initially it was really just a momentum trade. We started buying in the 380s, as you could see, before a pretty massive run up. And I thought from the get-go there was probably a 30-40% chance of real regulatory reform taking place, and we got exactly that. So kind of going into 420, we got the move from the 380s up into the fours. On that initial move, I sold, we were initially long 1,500 shares, so I locked in 10% gain in case there was a dump, and we stayed long 1,000 shares at 393. and we ultimately got the move we were looking for. As you could see, volume precedes price. The sector had 8 million shares traded on 421. On 422, the DOJ rumors started coming out that we were going to be moving to a final rule on rescheduling. That sent the sector from 420 all the way up to 550. And, this is where trading weed stocks is, certainly a high risk, high reward. We got up to 560 and instantly dumped all the way back down to 416. That's like a 30% drop in one day. So, we were cautious on this move. Sort of my thought process, also knowing the sector, was at first I wanted to see $4.07 hold. When price action for MSOs can hold above 4, it has the potential to rally to 6, 7. So it was certainly a buy the rumor, sell the news kind of event. So we took profits initially on Monday in this move here from 380 to 430. And then we got the move that I was certainly hoping for, where we rallied from 430 all the way up to 550. So that was a 35% gain in a week. And that was an incredibly low risk trade. We got long well before the crowd. I've traded this cycle maybe 8 times over the last decade. Sometimes you get burnt with these dumps, but trading with an experienced trader has its perks. And this is definitely a sector that's going to remain on watch. I don't think we'll see final ruling and regulatory change for another 2 months, but it's going to be a major tailwind and macro trend to follow in markets this summer. So as always, we bookmark anything we trade because I do believe in long-term potential of our short-term trades. My strategy is a combination of deep due diligence and fundamental analysis, and then on the trading front, we're dip buying winners at the right time. Our next trade here was on the same day we exited on the 21st, was ONDS. So this is a robotics and drone company specializing in military defense and homeland security. It's about a $5 billion market cap. If you want to take a zoom out here just to see the whole story, stocks ran from $1 all the way to $15 per share. And over the last few months has been doing a lot of strategic acquisitions. But let's take a look here at sort of what got us long. Taking a look at this year's price action, we saw a rally up to 15. And then for the most part, it's been trading in a channel, which is common after such a large run-up to kind of consolidate shareholders, new institutions come on board. But price action between 10 to 11.50, and I love stocks that are range bound because, from 9.50 to 11.50, that's a 15% channel. Which, if you're taking a $6,000 position size, it's $700 in and out, in and out, in and out. And you could get really good at trading these while they are in a channel. And then obviously, if you get a breakout, you could get some big gains like we saw on MSOs. So I was looking, back during the Iran war sell-off where this bottomed. And we got long on the 17th and the 20th. So each candle here represents 1 day of price action. And we were buying in the 970s, 980s. And on broader market bounce plus some good news for owns, got the move from the 980s all the way up into the 11s. So again, position sizing here, 500 shares, roughly 20% of my account at risk, and netted a nice 12% return in about a day and a half for $600. Once again, very low risk, high reward setup. And while these numbers, don't look flashy, I'm a big believer in, zoom out at performance over time. And, you could see here, $100, $600, $200, $478, etc., etc. But all of that compounds. And, when you zoom out, you see the 6K in gains, but now going into month 2, I'm trading a $22,000 account, not a $15,000 account. So a 30% position is $6,000, not $4,500. So as the account grows and scales, so do my position sizes, so do target P&L on trades. And that's where you start to see, serious gains, and why I believe the 15 to 100K challenge is doable is, I've done over 4,000 publicly verifiable trades with an average gain of $500. And you zoom out on that, I've turned $9,000 into $400,000 trading publicly in 18 months. So this isn't my first rodeo. I've done this before with small accounts. I've done this before with big accounts. I've done this before long-term portfolio management. So really with Summit Report, my goal and mission is to show you what's possible by following low risk, high reward setups, and, really being able to take charge of your financial future, not wasting your money on DraftKings, on FanDuel, on Polymarket, and, really looking at markets as a way for you to compound and grow your money. And, you zoom out 40% on $10,000, $15,000, you could go buy a vacation for your family. You could keep that money invested in the markets and continue to compound it. You could pay off your school loans. You could do this, you could do that. But I, really believe that markets offer people the opportunity to compound their wealth and get ahead financially. And that's sort of the whole mission here of Summit Report. And, like I said, I share every trade, winners and losers. So after that, little hot stretch that I had, I think my winning percent was as high as like 78%. I knew we were due for losers. And in short order, 2 days later, started taking some losses. We'll skip this ONDS retrade. That one I actually traded well and stuck to my rules. But on April 28th, this iron trade was ugly, and I was unhappy with how I played it. So let's take a look here at iron. If you guys have been following me for the last month, this is one of my favorite stocks and companies. We played this earlier in the month of April from $34 up to $45 for a nice gain. And this is me kind of coming back for seconds on the trade. So we got long on the 27th, 28th here. So I was long 135 shares. And as you could see, larger position size, that's about 6,500 long. So as the account size grows, my percentages stay the same. So that was still a 30% position, but now I'm trading with more capital. So the dollar amount on these positions is going up. So we were long at 48. And I had in daily briefing and outlined in the entry, my risk on this trade was 46. And I didn't stick to my rules, and it cost us a larger loss than I would have liked. So got long with the hope here that it was a back test of 48. Broadly speaking, AI data centers is one of the hottest parts of markets. So I was just expecting this trend to continue. We broke out over 52, which is a long-term resistance level on the stock. So my thought process was, okay, we're going to back test 48 and hold that level. So I started buying in. And as you can see on the daily chart here, we got a gap down. So let's take a look now at a 1 hour time frame on this chart. So this was Monday where we were getting long. So initially broke through that 48.22 level that I had outlined as a key resistance, turned into support. So briefly, it got back above. We saw the bounce to 49. So my thought process on this trade was, okay, we'll get a move back towards 54 plus, potential, $1,000 trade set up, on a small position size. And the exact opposite took place. Saw pre-market, this was gapping down, and we hit my risk on the trade pre-market. Now when that happens, I do like seeing how the market opens, because I do use the options chain to inform some of my decisions, especially on a stock that I've been trading for, over a year. But nonetheless, we got that retest of 46.77. I was expecting that to flip back into support. And as you could see here, just a total washout. So my risk on the trade was 46. I got out at 44.8. So only an extra like 150, 200 of risk on the account. But what I look at here is this was a 7% loss. My hard stop on my trades is 5%. So I target 3 to 5% risk on trades with like 12 to 20% upside. And, this isn't my first time trading publicly. So when I make a mistake, I own it. And, at the end of the day, it turns into really great content of what did I do wrong? How could you improve, going forward? So, certainly turned into a good lesson. Just to take a look here at like a 15-minute time frame. So shorter term on the 2 days of this trade, I really was fighting the trend. This was a bad trade, like A to Z. I looked back at it and I was very unhappy. Like at the end of the day, it was only a $440 loss, but it was just an undisciplined trade. I probably should have cut some size as this started downtrending overnight and after hours. Like it was really a straight line down from 49 to 43. And that's the psychology of trading is, this is a company that I love and believe in long term. So sometimes your emotions can cloud your judgment in short-term trades. And that's exactly what happened here. So when I, break my rules and make a clear mistake on a trade, I like to kind of, take a step back. So as you saw here, I didn't trade for a day or two, just to kind of reset. That trade didn't go well. I had 3 other trades that I just got out of. With trading, I believe in no emotions involved whatsoever. Like I'll get happy or sad for 3 minutes and then it's on to the next one. But I was on, a really big heater of super high win rate, super high returns. And, the market will humble you and give you some losses. And that's what took place. But it's something important to see is, while there was 3 or 4 losing trades in a row, I post all that publicly. I don't hide from losers. And, looking forward, right away, it was nice to see one go through the net on May 1st, locked in like a 7% gain there. We have 3 positions active right now that are all green for another 500 in unrealized gains. So, as a trader, and as you guys will see, over the coming months of Summit Report, is drawdowns are a part of the process. Like I said, I've been trading for a decade. Everybody has red months. Everybody has red weeks. You just have to remember that, I have a very large sample size of being a profitable trader. So when things go against you, I'm a big believer in just like stepping away from the screen, reassessing, overall strategy, what my macro opinion is on the markets and on the economy, and making sure that it matches everything that I'm trading. But nonetheless, all in all, looking at our 1 month recap, 42% returns in 1 month, outperforming the S&P 500 by 400% in the same period, outperforming Bitcoin by 220%, outperforming the NASDAQ by about 280%. It's late for me, so I can't do all the math, but I really wanted to just highlight best and worst. And I have previous video lessons on the first 4,000 in gains in the account. This was more of just like catch up, see where things are at. And I did wanted to take the time to highlight that iron trade, because I know $400 isn't anything crazy in terms of a loss, but the principle of breaking rules and fighting a trend, I thought was important to highlight for you guys, because what I've learned throughout my trading career is you learn more when you break your rules than your glamorous, sexy trades. Sometimes you get lucky, sometimes you really did the work and the thesis played out. But when you make mistakes, you clearly fucked up and you did something wrong. So I like to spend time on when I clearly break rules and how we can improve from that going forward. But nonetheless, very happy with month 1. Super excited for the PDT rule to go away on June 4th. That's going to make trading a small account so much easier. So for those of you that have an account with $3,000 to $5,000, you'll be playing with the same rules as somebody with $30,000 in just 1 month. So, for those of you that are following my strategy, I will be able to lock in gains much quicker. We'll be able to take a lot more positions. And like I mentioned, we'll be doing more options trading in this account, either A, once it hits 25K, or B, by June 4th, once that PDT restriction goes away. And on top of that, I'm going to be trading live in probably 2-3 weeks. But my strategy is designed for part-time traders, but I think it's important to see how I look at markets in real time live. So we're still flushing out what platform I'll be using, but the plan is to go live 2 trading days per week, and kind of show you guys, everything that I'm trading, as well as, looking at suggestions that you guys have. So in real time, you could ask me to look up a stock you like. I'll give you real-time analysis and feedback on the stock, on the chart, etc. So a lot of cool new features being rolled out. As always, if you guys have any questions, feel free shooting me an email, Connor at Summit Report. I read and answer every email I get. And on top of that, the phone number that you get the alerts from, you could text back, and it's me. So if you have a question, if you want to share, how much money you made on a trade or how much you lost, like shoot a message. I'm in front of the screen all day. I read and respond to everything that comes through. So month one, plus 42%. We keep pushing.